you guys know me to some degree. It's been a long time, Ken. I think it was back at West Sarasota when you were serving there with Emily that that I met you and Valerie. And um, so known each other for a long time, how much we've talked. But a little bit about me. I'm actually a Sarasota native. I was born and raised here. Kind of one of the few and far between. Um, I've got three older brothers. I'm the youngest of four, not quite six,
There you go.
but we were getting up there. Um, Spent the first part of my career in emergency services. I was a firefighter for 8 years in Sarasota County. It was really cool. I have two older brothers that worked for the department, and we actually all worked out of the same fire station, which was really, really cool. Um, so I've taken what I learned from the fire department as far as helping people. It's always been a passion of mine. I love people. I love God and I love people. And so whenever I got injured and had to figure out something else, I really wanted to do something where I could make an impact and serve others. And so God called me into this, and um, it's been an awesome journey. Just recently, well, not recently, I'd say about 6 months ago, there was a group of us that had worked for a different mortgage broker called Nexa Mortgage. And we just thought, I think we can do this better. We can take care of our clients better. We can take care of our LOs better. And so we partnered up and created Solid Mortgage. We're licensed right now in 7 different states. So we've got Florida, Texas, New Mexico, Arizona, Colorado, Washington State, and we are working on Ohio and California. I don't know if you guys are doing deals in California or not, but yeah. But we are expanding. The goal is to eventually be able to be, doing loans in all 50 states. So I don't want this to be me sitting here and reading a script. So I'm kind of going to go off the cuff, and
Sure.
so it may be a little rocky. I'm not done very many presentations.
Give it away.
So that's it. I'm just kind of shoot from the hip. So there's really 3 pillars of Solid Mortgage, and I'm not going to make this the meat and the potatoes. The loan programs is what's going to be most useful, but I at least wanted to tell you a little bit about the heart of the company and what our goal is. So one of the 3 pillars, so there's 3 pillars, expert guidance and constant support. The second is maximum value and competitive rates. And the third pillar is a streamlined stress. I say stress-free. There's going to be stress when you're making a large purchase and investment, but my job and my goal is to try to mitigate and reduce that stress in whatever way I possibly can. And so what that's going to look like for you guys, that first pillar, as far as expert guidance and constant support, obviously you're going to get, your clients are going to get an LO that's available, right? My phone does not turn off. These guys can testify. If you need something on a weekend, you need something at 8 o'clock at night, you can call me. My phone is on. I want to be available to people. I don't work banker hours, so it's not, if you don't catch me between 9 and 5, catch me on the next day.
Right.
As we all know, especially when you're in processing, days and hours matter. So, being available constantly, that's one of the things that, you can rely on. If you need something, you have something that comes up, call me, text me, email me, whatever works for you, and I will get back to you immediately. That's really the goal. No more playing phone tag. That's another one being passed around from different people to different people. That's not the way that it is with us. I'm going to be with your client, like with Brad right now, even through the processing of the loan. He's going to have communication with our processor, but if something comes up and he has a question, or something comes up and you have a question, you guys can reach out directly to me. We're not going to be passing you around to different departments and, so on and so forth. And one of the unique things about the way that we operate, because not all of us are in Florida, we've got some that are in Arizona and some that are in Washington, but we all work out of a Zoom room. We log in the morning, our processor is there in the Zoom room. So we go over files, we do a file review just about every day. So it's really just having all of those resources in one central location, that we pride ourselves on. and keeping you guys informed through the process. I want to make sure that I'm sending you guys. I don't want to loan go into process and then go radio silent. People are going to have questions. Hey, are we running into issues? Where are we at in the process? Have we got our appraisal back? We're going to be, providing those updates, letting you guys know where we are. If there's an issue with the loan, whether it be credit, we have a credit repair agency that we work with, that we partnered up with to help. There's not many scenarios that we're not going to be able to do something. There obviously are some scenarios if people have mortgage lates. These are hard stops, unfortunately. But that being said, it's not one of those things. It's like, oh, you've got mortgage lates, I don't want anything to do with you. It's like, okay, well, let's figure out a game plan. Let's figure out what we can do in this time, while we need to wait 12 or 24 months, whatever it is, depending on the lender, to get you prepared. That way, when those things expire and you're able to qualify, that we can get you in and make it a smooth process. We're working on that with Kevin, doing some credit repair and stuff like that. So that's what that part means for you guys. What it means for your clients, questions are answered promptly. It's very similar to what what we would be offering you guys. If your clients have questions, my phone is available. Right. Believe me, and people take advantage of it. They call me 8, 9 o'clock at night, just about every day. It seems like it seems like all the problems or questions that people have are at 8 o'clock at night. You're like,
if I answer the phone, I'm available.
I like that. I like that. But like I said, it is a stressful process. People are making what is most likely the largest investment that they're ever going to make. And so there's going to be stress surrounding that. So my job is that, yep. I mean, I get it too. Every time I go into processing and it's like, okay, what kind of issues are we going to run into? What kind of things can we be proactive and trying to mitigate ahead of time? Obviously guidance through the process, informing not only you guys, but your clients as well of what the process looks like once we get your loan into processing, the steps that we're going to see, initial underwriting, getting our conditional approval, meeting those conditions, getting our LE out, our CD, going through our cool off period. So trying to paint a picture to the client, of what that process is going to look like. That way there's no surprises and people are like, I didn't realize that this was going to be a part of this. Have all the information out front. That way, people stay informed. And I know this is going to seem cliche, but it's not. This really is, and this is my heart. I'm invested in not only a transaction, but the success of people. Like, one of the best days, man, is going and seeing people sign and the joy that they have on their face. I just had a closing with a young family that is on staff at Lakewood Ranch Baptist, I believe. And they've been in a 1-bedroom house with 2 little babies, like literally like a studio, and the joy that they had, man, it was,
Hey, we started out before you came along.
I was like,
1 bedroom. Did you really?
1 bedroom, 2 kids.
Oh man, God bless you.
things eating up.
Oh yeah, it worked. Yeah, we were in a neat place. Anyway. We were in a He called it, Mom. At least the ceilings, Mom.
Oh, jeez. So that's the first pillar. The second pillar is maximum value and competitive rates. Obviously, one thing about being a broker is that we have access to multiple lenders. We don't have 150 lenders because even when we did have 150 lenders, we didn't use them. There are a handful of really, really solid lenders that we have a track record with. We know how they operate. We're not taking a chance on a lender. We don't know what their turn times are. And so depending on the loan, depending on the closing, we have different options as far as lenders that are going to be more suitable for something like a fast track. Hey, we've got to get this closed in 10 days. The other issue, or the other lender or other client, the deal blew up. We've got 10 days. We've got to rush this to the finish line. We have a lender that we would go to and say, this is who we're going to go to. Yeah, maybe the rates are going to be a little bit higher, but you're going to close. And that's, what we all want to get to the closing table at the end of the day. No surprises. We keep everything up front. There's no, last minute surprises, fees, none of that stuff. Everything is up front, which is par for the course. That's going to be the case for most lenders, but it is really important to say, and so people know that there's not going to be any surprises throughout the process.
Yeah.
Um, so what this means for you guys, competitive rates, maximum buying power for your clients. We all want to, obviously we don't want to make people mortgage poor, but we want to approve them for as much as they can. That way they can make the choice of what they want to invest. Transparent pricing. Obviously, we're going to be completely upfront, with where we are. I oftentimes will get on a Zoom meeting and go through rates when it's time to lock, explain to them what discount points are, how that's going to affect their interest rate, whether it's a wise investment. If you're saving $20 a month and you're paying $3,000 in discount points, it's going to take you years to recoup that. Do we anticipate that interest rates are going to come down within 2 years? God, I hope so. So, it's one of those things where I don't typically like to do discount points if it's going to be over 12 months to recoup, because chances are, although we've been saying this now for years, that rates are going to come down. But that's one of the ways that we would, go through that with the client, is get on a Zoom call with them, open up the rate sheet for the lender, walk them through the rates, show them what their principal and interest is going to be, and then talk to them about discount points. Some people are going to want to spend, their monthly payment is going to be their biggest hurdle to jump over. They may not be the rate, but hey, I need my payment to be in this area. So, obviously that's where discount points would come in, and we would talk to them about that. And then the third pillar being a streamlined, stress-free process. What this means for you guys, fewer delays and complications. Nobody likes delays and complications. Nobody likes to have to do an extension and an addendum to push back your closing. And this is going to allow you guys more time to focus on your clients and finding more properties, finding more listings, and finding, more potential clients. And then the last part of that would be a lending partner that's going to enhance your guys' professional reputation. If we're doing a loan for you guys, we're going to be directly reflecting on your business, and we don't take that lightly. You know what I mean? One bad transaction can really spoil a relationship. I've seen it in the past with other people. And so we really do strive to make sure that we're making you guys look golden. You know what I mean? And what it means for your clients: less paperwork, less hassle and confusion, clear communication every step of the way, and giving them confidence that the lender that they're working with has knowledge, understands the process, and can help them with any issues or, hangups that they might come across. All right, so a couple of our competitive advantages, right? So we offer something called a solid pre-approval. This is we call it the 10-minute game changer. Now, granted, we can only work as fast as a borrower works.
Sure.
But if a borrower is able to get an application, borrower is able to get us documents, and we can get some sort of credit, whether it's a soft pull, a hybrid pull, or a hard pull, we can get you guys a pre-approval letter in 10 minutes. Right. It seems that way. But that being said, we do put this out there as, look, we can move quickly. You know what I mean? If you have a client and they're ready to go and they're on top of their game,
Right.
We'll get this done in minutes, Like I was mentioning, as far as credit, we do offer soft pulls, hybrid pulls, and hard pulls. So if somebody is, hey, I'm really concerned about doing a hard pull, I'm not sure when my timeline is, when I'm going to be purchasing. I know that these credit reports are only good for 90 days. Maybe we can do a soft pull, get an idea of where we are. That way we can prepare ourselves whenever we're going to be getting closer to the time that we're looking to purchase. And then we can do a hard pull. And you guys obviously know that having a pre-approval for a buyer is worth its weight in gold. I mean, it shows your seller that your buyer is serious, that they're not just out on a whim, walking through an open house. I really like this place. No, they're invested in this. They put the time in. They've invested money in a credit report. They've gone through, provided documents. Everything's been verified. It really does, position you guys. Absolutely, absolutely.
Yeah.
And let's be honest, we don't want to waste our time. Our time is valuable. We have a lot of people that are pulling us in different directions. And so when people are, ready to move, we're able to do that, and we move quickly. Obviously, pre-approvals that you guys can count on. We're not fast tracking through this stuff. We go through it with a fine-tooth comb. We look for any potential issues ahead of time. We want to catch an issue before it becomes an issue, so to speak. And then working around your guys' timeline. It's not the other way around. We're not on our time. We're on your guys' time and on the borrower's time. That goes back to if you have an issue or something that comes up at 8 o'clock, 9 o'clock, 10 o'clock at night on a weekend, my phone is on. You guys can call me, text me, email me, whatever works for you. I really do want to make myself available for you guys, all the time. Multiple loan programs. Again, this is not uncommon with brokers, but we have access to a ton of different loan programs. I don't know if we have an Indian loan. I heard Joey talking about an Indian loan. That was actually a note that I took to myself. I gotta go look into this Indian loan. I don't know what this is. But your QM loans, your conventional FHA, USDA, VA loans, obviously, and then your non-QM loans. So some of these different products, jumbo loans, bank statement loans, buy downs, ARMs, anything that's out there that's available. Really, the things that we don't do are anything that's not going to be tied to a mortgage. So we're not going to have hard money. We're not going to have personalized loans. It's going to have to be tied to a mortgage. So, HELOCs, HELoans, anything that's going to be tied to the mortgage. Let's see here. Yeah, I mean, so I would say in a nutshell, that kind of paints a picture of what we stand on as far as a company. And we really do pride ourselves on that. So as far as loan programs, I'm sure you guys are very well versed with conventional FHA, USDA, VA. Is there any question about any of those types of loans that you guys have that okay. I mean, those are the go-to. Yeah. They're pretty straightforward. So I'm not going to spend a whole lot of time on those. The things that I do want to talk to you about are the ARMs. Believe it or not, we're actually seeing ARMs come back. They were demonized for a long time, obviously with stuff that happened back in 2008 that played a negative role, and people were like, man, I don't know. But we're finding that one of the reasons that they went away for such a long time was that the yield between them and a conventional loan or a QM loan, it didn't make any sense. You might as well just get a fixed rate if you're looking at an eighth of a point different. But if you're looking at, a full percent or 1.5%, it may make sense. You may have a buyer that's expecting a pay raise, so you get him into an ARM, a 5/1 ARM, their interest rate is locked for the first 5 years. And then obviously, depending on the index and the margin, when that 6-year comes around, there's going to be a cap. Normally it's 1% if it's FHA. If it's conventional, it can go up twice a year. But there's different loan products and they're tied to different things. The SOFR index, there's different programs for that. So it does have its utility. It's not going to be a go-to for every client, but there may be a circumstance where you have a buyer that's, hey, you know what? I've been in this position for this long. In 2 years, I'm expecting to be promoted to this position. It's like, okay, well, look, we might be able to save you some money here. Sure. And then before 5 years, refinance you into a conventional loan. You're saving a lot of money up front. So I do think that is a good tool. And it's something that I do shop, when absolutely.
VA.
Yeah.
Only allowed to purchase and be on one property.
Correct.
All right. So if they're working on selling that property and buying another property, what's the best way to keep that as a good flow? And can they even get pre-approved on the other property without the first being sold?
Are they under contract?
No.
It might be difficult, but yeah, most of the time it's having someone under contract is going to be. But if it's listed, we know that this is something that's going to be taking place, whether it's not under contract. We have figured out ways where lenders will have some leniency for that. Yeah, the home has been listed. They're intending to move.
Because a lot of people are just scared to death.
Sure.
I'm going to sell my house. I have no place to put my
Right.
family. I
Right.
can't lock down the next house I want to get to. So I've been always trying to figure out how to circumvent that a little bit and come up with an answer.
Now, some I've worked with that I'm currently working with now, they couldn't sell the house because it would have been a short sale.
Mm.
So instead, they have the house under VA, but they have it as a rental now. and they're able to buy the next home because they're using the rental as income
Yep.
producing property.
Yeah.
So they can pull out another VA to purchase the next house.
Is the first one remaining under a VA?
Yeah,
Yes.
I don't know that that's,
That doesn't sound correct
I
to
don't
me.
think so.
That's what I said, but I guess the lender is saying since it's an income producing property, bringing in under the amount of what so they're having to make up the difference, $150 a month.
Okay.
And
But
so
they're not
since they're
canceling the VA mortgage on the first.
Correct.
That's news to me.
That's news to me as well. Which lender is this?
Yeah, I was gonna say share the lender.
I'll let you know in a second.
Okay. Yeah, I've never
That
heard.
hasn't closed yet, right?
No, it's not, yeah, they're keeping it open as a rental.
No, I mean,
Purchase.
the original purchase, did the second purchase close?
No.
I just don't know how that would be.
Okay, 'cause I'm curious as to how the VA is gonna approve that.
Right.
myself.
Right.
I've never heard of it working yet, that's why I keep asking the
Bill,
same
did you
question.
send me that slide?
I did. I emailed it. Did it come through? Okay, hold on.
This is where
Did you
we'll
send
have
it to my
discussions
electric
are
bill
very
bill?
helpful.
Oh, it's because I'm not connected. I'm not connected to the internet.
Oh,
That would
Oh, yeah.
probably be, what's up?
Yeah, Leah, you gotta show me where you're hiding our access for our website.
All right, which one would I be? Elements?
Our Wi-Fi, let me try. For our wiki.
I don't think I'm hiding it anywhere. I'm pretty sure I just have it as Gatewood Drive, or it's 11015 Gatewood Drive.
Password is incorrect.
11015 Gatewood.
Yeah, Chris, I'm really interested to hear about that, man.
Yeah, I'll let you know.
I've never heard that before.
Back in my text somewhere, so I'm just.
Cause
gonna
if
ask
that
again.
can happen, it changes.
That opens some doors for
Yeah.
sure.
Yeah.
Yep, awesome.
If that's real, I'll be reaching out to some people.
Yeah, I'm gonna do some research on that myself. I've never heard that, but I'm not the end all be all as far as, you know.
Yeah, me either, but I still question how long has that lender been in the business as well?
Right.
That's worth definitely seeking some understanding with.
Yep, I'm gonna be doing some research on that for sure.
'Cause literally, I've been told no on that repeatedly over the last couple of weeks, and I've reached out to a number of different lenders.
Try harder.
These of you come into the office every now and then.
That's
maybe you
right.
work for it.
All right, it's sent now.
All right, perfect.
So speaking of VA, you guys both know this, and I'm not sure if you know this or not. Our broker owner, Chris, he's a veteran. And then me being a first responder, one of the things that's really obviously close to my heart is that brotherhood. And then with Chris, obviously veterans. And so we've created two different loan programs that are specifically aimed at veterans and firefighters. We're working on a third for nurses. It's called Nurse Haven. It takes some time to get some of this stuff up and running, get the website going and all that kind of stuff. And then we're also going to do Blue Line Home Advantage. So something for law enforcement as well.
Basically, a first responder.
That's what it is. Yeah. And basically the way that it works is we as the lender, if you are, if you're a veteran, obviously you're going to have a VA, you're going to have your certificate of eligibility. If you're a firefighter, you have to either be active, retired, or a volunteer. What we're doing is we're contributing $2,000 in lender credit. You can either use that towards a buy down or you can use it towards your closing costs. And if you're a part of the program like Chris and Leah are, we ask that you would match that. So we're giving a total of $4,000 towards closing costs or buy down. This is a grant. We're not coming back to you. It's not a second lien. This is just, we're doing what we can to try to, lower the expense and make it, more possible for. One of the biggest things that we run into is people having issues with either coming up with a down payment or covering their closing costs. And there are programs out there like your Hometown Heroes. I don't like them though, and I'll tell you why. A lot of people are not aware, and this falls on the lender or the LO not informing the client. those programs are a second lien. They're a hidden second. So if you're going to try to go and refinance your property in 7 months because rates come down or whatever the case may be, or you're going to sell, you're going to get hit with a bill. So whatever it is that you pulled from that in order to cover your closing costs,
Sure.
you're going to have to write a check. And that has caused problems for people and ruined transactions and ruins deals. So I'm not a big fan of that. We do have other down payment assistance programs. One of the ones that I really like is from a company called Equity Prime Mortgage. We did a deal with EPM, Eden and
Wilbank?
Wilbanks.
Yeah.
Yeah. Not all the time do they go like that. That was a pretty complicated. Yeah. But no, it is a great product, and because it's a completely forgivable grant. In six payments, 7 months, you can refinance. You don't owe anything. You're not going to get hit with a bill. Some of the downsides to it, you're going to have a lot in closing costs. So you're going to have to get a lot in seller concessions in order to cover those closing costs. And typically, your interest rates are going to be anywhere between 1% higher. That's kind of the safe average. But if a person's DTI is within good range and the only thing that they're having an issue with is coming up with a down payment and closing costs, well, this is an option that we can explore to make that happen. The one that I really like, and this one is one that I have been cooking with lately and has greatly helped people that were on the fence because of rates and because of their monthly payment. So this is an example of a borrower right now that I actually have under contract that's closing in the beginning of July. We qualified her for a 6.125% interest rate. All right. So what we did is the 2-1 buy down has to be paid for by the seller. Otherwise, it would just be discount points. And there are QM guidelines of how many discount points you can apply to a loan, depending on the type of loan. With the 2-1 buy down, we're able to get a tremendous amount of savings. So if you see, this is a 30-year fixed. Their principal and interest, $2,537.57. Their first year, that interest rate is going to be a full 2% lower. So instead of 6.125, you can see year one, 4.175. Note payment shows there the $2,535. The buy down payment for their first year, they're going to save $513. That makes a massive impact. Again, this is another thing that if somebody is on the fence because of interest rates, or I'm not comfortable with my payment being that high, I don't want to be mortgage poor, this is a way to get people in the door. We really do anticipate rates coming down in 2 years, but even if it didn't, the good thing about this is that it's fixed. It's not an ARM. You're not going to be having to look at the index and the SOFR to figure out how much your interest rate is going to be going up. What your fixed rate is at 6.125, which right now, that's not a bad rate. We're seeing 7s, not at all. But what's really good is a 4.125. And if you're not paying for it, you're getting all seller concessions. That's nothing but a benefit to your buyer. It's going to put a tremendous amount of money in their pocket. And then you can see in year 2, it's going to go up to a 5.125. So the first year, 2%, second year, 1%. Their second year, they're going to save $263. So you add that up, it's a lot of money. It's a lot of money in savings. And then the third year, it would mature to whatever the actual note rate is, but nothing above that. It's not going to increase.
4.125, what's the APR on it?
It's not going to be in this. Let me see if I can pull it up.
I'm just curious.
If somebody's doing the 2-1 buy down,
Mhm.
and let's say this next year goes by, and in August of next year, they want to refinance, what is that upfront cost to them?
They can refi, no problem. Yeah. We would want to make sure that whatever rate we're going to be able to qualify them for is going to be lower
sense.
than, right. We want to make sure that it, like in this case, if the second year came around and it was going to be a 5.5, well, we don't want to do that yet. Yeah. We want to keep your rate down to,
So then do you do the streamline refi?
absolutely. Absolutely. Love streamlines. They are.
What's the total cost then with the streamline refi?
As far as like additional fees or anything, we don't charge any additional fees. So whatever your closing costs are, we'll roll them into the loan, or you can pay them outside at closing if you want. But our goal is to be their lender for life. So we do fee-free streamlines.
Fee-free.
Fee-free.
You said that about us.
Yeah.
Good luck. But So you can see this cost the seller $9,318. But if you add up how much they're saving in their monthly payment, it's going to be well worth it. And again, this is not paid for by the borrower. This is not they're paying discount points. This is all seller paid. So this is just another way to approach, the hurdle of, I don't like my monthly payment being this high. I don't like my interest rate being this high. This is a way to get them into the door, and then,
The way my mind works, even if you can make that payment, do that.
right.
And make that payment.
Yep.
And, you're just wailing away on your principal.
100%, 100%. Yep.
Yeah.
Yep. So I love this product. This is like one of my go-to right now. Obviously, seller concessions are going to have to be available, but this is a buyer's market, and so as you guys have seen, housing prices have gone down. This gives more leverage to buyers. So it's a great product, and I think that we're going to see a lot more of this until we see rates come down significantly. And even then, it may not go away completely, because if you can have your buy down paid for by the seller, you could see yourself, right. Yeah. So those are the two. This is like my go-to right now. I love this product. Again, it's going to be situational. There's going to be times where a borrower is expecting a raise. I would always look to a 2-1 buy down before an ARM. It just gives way more peace of mind to a borrower knowing. Exactly. I don't have to anticipate that in 5 years, my rate's going to go up 1%, and then every year it's going to go up. Now, granted, there are going to be times and situations where those ARMs are going to make sense. But I always look to this. It's less risk to the borrower, and it's no out of pocket to the borrower to get just an awesome rate. So this is an awesome product that we've been hitting hard. I've done 2 of them in the last month.
Nice.
And people, when they see that payment, what their first couple of years are like, man, that's okay. I like that. I can do that. Yep.
Right.
And then again, Krista, your point, if rates were to drop significantly, whatever, something happens in the market and rates come down 2%, it's like, we can always refi you, fee free, like I said, and get you even a lower interest rate.
Right.
Everybody likes.
I mean, they're still paying docs names.
Of course, yeah, all your title fees, your impounds, your escrows, all of that kind of stuff. But as far as like an origination fee or a processing fee, we do fee free if you're, if, like I said, we want to be the lender for life. So
So those are the closing costs that you said you could roll into the loan
Yep.
itself, though, right?
I didn't think about too, again, is, if it's a second VA and they refi, do they have to pay a funding fee again?
it depends on what their disability level is. If they're over 10%, they shouldn't have to pay a funding fee. Yep.
Okay.
Yeah, I actually just did a streamlined VA, and it was, now granted, they had 70 and 80% disability, so they didn't have to worry about the funding fee. But
Same thing, he's got, you wouldn't know it meeting him, but
Yep.
he definitely has those disabilities.
yeah,
And, they honor it, which is nice.
yep. The VA loan, I'm not sure how it got a bad rap. I truly don't. It is the best loan product.
It's because of their appraisals.
Yeah, yep.
So that's how it got a bad rap.
Yeah.
They're just, they're very stringent.
Yep.
And they-
Even more so than FHA.
and
Yeah.
they- And they undervalue things.
Oh, yeah.
Right.
Which makes it hard. It's great for the borrower.
Yeah.
But it's hard on
Very
everybody
convenient.
else.
Yeah.
It's fine now in this market. I haven't
Yeah.
had any
Yeah.
in this market,
Yeah.
That's right.
But last year,
On an upswing, it's harder.
Yeah. And so I had made mention of the VA program. That's for those who serve. And then we have the red line, which is, it's almost identical to the VA program that we have. We're offering $2,000 in lender credit, either towards a rate buy down or towards your closing cost. And then if you're a part of the program and you have a client, we just ask that you would honor the same. The goal, and what we really anticipate, we're playing a long game with this, is rather than coming to you guys, as lenders and saying, hey, do you have any clients? Anybody that I can be helping you with? Do you have questions about pre-approval? We're hoping and believing that these are going to become lead generating machines. That people are going to hear about Redline, that they're going to hear about For Those Who Serve, and word will start to travel. And then the point is going to come. It's like, hey, Kent, I have a pre-approved buyer for $350,000. They're a veteran. We're asking that you'll do the $2,000 credit. go shopping. That's the heart of, I hate, feeling like I'm asking for a handout. So this is our way of, we're planting the seed now. We're gonna nurture this, we're gonna water it, believe it's gonna grow into a lead generating machine where then we can really, give back to you guys, and say, hey, it wouldn't even be a matter of, literally just gonna be, hey, Leah, hey, Chris, hey, Kent, I've got a pre-approved buyer. They came through Redline, they came through for those who serve. This is what their purchase point is. Go have fun. That's the goal of what we're doing. It's going to take time. Obviously, we've only had it up and running for about 8 months or so, but we are gaining traction. We have had leads that have come through, and we're just going to believe that that's going to continue to grow and compound, and we'll have leads for everybody. That's the goal.
I like it.
Any questions about anything that I've brought up here?
I have a question.
Leo says one.
Hey.
Hey. Yeah, I'm surrounded with a lot of Spanish people. Do you guys have Spanish people in the office to help
We
with
are working
that?
with a particular LO that we are trying to recruit right now in Florida. That's a good friend of mine. That's actually from the company that all of us were at before. So short answer, no, but stay tuned. We're working on that. We're in conversations with them. And I think that they're going to end up coming over.
Okay, yeah, because that's gonna make a big difference.
Absolutely.
Especially
Yep.
for the clients that I usually work with.
Yeah.
Yeah.
Yeah, no, that's one of our priorities because we're running into that a lot. We do a lot of leads as well through like Realtor, and that's actually something else that I will talk to you guys about. A lot of Spanish speaking, and so it's a lot of Google Translate right now is how we're getting through it. But that's not the most efficient way. We really do want to have a Spanish speaking LO, and like I said, stay tuned. We're working on it.
Right.
I do think that that's going to come to fruition fairly soon.
Okay.
Yeah, Leovis and Daphne, they're both very fluent.
Oh, Daphne Roman, right?
Uh-huh.
Yeah. Okay. Yeah. So yeah, but we are working on it. That's something that we've recognized is going to be.
Yeah, they feel more comfortable
Sure.
when there's a Spanish, they understand what they're
completely understandable. I would feel the same way. And that's what we definitely recognize the importance of that. And that's why we're, that being said, we don't want just any Spanish speaking LO, like we really want somebody that's going to fit in with the culture and with the heart and the vision of the company. But like I said, we have somebody that we're actively working with right now to bring over from the dark side to the light.
okay. All right, that sounds good.